If you're still using the stochastic like this, then you're making a big mistake.
What?
There's a much more profitable way to use the stochastic indicator. I don't blame you if you're using the stochastic like this because this is often what you find in books and on the internet. So be happy because now I'll teach you the best way to use the stochastic indicator. First, let's install our stochastic indicator. We go to TradingView, then to the indicator section and type stochastic. Then the stochastic indicator will appear on your chart. The most common way to use stochastic is by waiting for crossovers in the areas above 80 and below 20. This method can actually generate profits for us, but as you can see, there are still many losses that occur when using the indicator this way. For example, here, the stochastic has crossed in the 20 area, but the price still drops, triggering a stop loss. You don't want this to happen to your account, right?
No! God, please, no!
Let's discuss a better way to use the stochastic. Don't forget to prepare your notes because this strategy is really worth to learn. Now, we'll learn about stochastic divergence. Divergence happens when the price of an asset moves in the opposite direction of a technical indicator. There are two types of divergence, bullish divergence and bearish divergence. Let's start with bullish divergence. This occurs when the asset's price forms lower lows while the stochastic oscillator forms higher lows. It suggests a potential reversal from a downtrend to an uptrend. In this example, the price falling down and the stochastic forms a bullish divergence, which confirms a better entry for us. Next, let's learn about bearish divergence. This occurs when the asset's price forms higher highs while the stochastic oscillator forms lower highs. It suggests a potential reversal from an uptrend to a downtrend. In this example, the price is rising and the stochastic forms a bearish divergence. That makes us to reduce our chances of experiencing a loss. Now let's see a real example on the Bitcoin USD chart.
Let's do this!
Currently, the price is falling. However, when we look at the stochastic indicator, there's a bullish divergence indicating a trend reversal to an uptrend. Now is the right time to buy. You can set your stop loss at the last swing low. And set the take profit at 1 to 1.5 times the value of the stop loss. As expected, the price touches our take profit point. Now, to trade on bearish divergence, we need the price to be rising. However, when we look at the stochastic indicator, there's a bearish divergence indicating a trend reversal to a downtrend. Now is the opportune moment to make a sell trade. You can set your stop loss at the last swing high. And set the take profit at 1 to 1.5 times the value of the stop loss. As anticipated, the price reaches our take profit point. After learning about trading using stochastic on Bitcoin, why don't you immediately put it into Bybit? Bybit is a reliable crypto exchange with more than 23 million users. I always use Bybit for my crypto trading because the transactions are fast and have a low fees. You can also get up to $30,000 in deposit rewards. Click the link in the description below to register on Bybit now. Okay, let's get back to stochastic topic. So what else can we do when using stochastic? Besides divergence, there's another secret way to leverage the stochastic indicator. We can use the stochastic indicator for trend trading, but we need the help of another indicator for this strategy. Here, I'll combine the stochastic indicator with the exponential moving average indicator. So now you go back to TradingView, then search for exponential moving average. Then change the period to 200 and change the color to yellow. Now let's discuss another way to use the stochastic indicator. In this second method, the stochastic indicator plays a role in finding retracements during trend trading. What does this mean? When the market is trending, the EMA 200 also acts as dynamic support and resistance. Let's look at a real example to make it easier to understand. If the price was previously above the EMA 200 and then retraces back towards it, there is a possibility that the price will bounce back up because the EMA 200 is acting as dynamic support. This is where the stochastic indicator comes in to help us identify the entry point. When the stochastic crosses below the 20 line, we can then take a buy position. Once you have entered the trade, you need to set your stop loss and take profit levels. Then you can enjoy your profits.
Wow.
If you find the opposite condition where the previous price was below the EMA 200 and then retracted back to the EMA 200 area, then you see the stochastic giving a sell signal, you can place an entry there. Don't forget to set your stop loss and take profit values and enjoy your profit. You've already learned two better ways to use the stochastic indicator. The first is divergence and the second is using it in trend trading. Actually, there's a simpler way you can use, but you need to be able to draw support and resistance lines on the chart manually.
I can do that.
For example, you should be able to identify support areas where the price often gets rejected and bounces back up. You can look for opportunities in this condition using the stochastic indicator. Similarly, if you find a strong resistance area where the price always bounces off, you can also look for opportunities using the stochastic indicator in that condition. Now, I'll give an example of using the stochastic indicator at support and resistance areas. This is a strong support area where previously the price bounced back strongly when it touched this level. Now the price has returned to this point. The stochastic indicator also crosses over in this condition, so now we can place a buy trade. Set the stop loss and take profit to manage your risk and potential profit. Now let's put what I've taught you into practice. If you need a reference, you can also come to the Simple Trade Club Telegram channel where I often share free market outlooks. If you are interested in Forex Robot, click the video on the left, or you can use another profitable strategy on the right video. See you in the next one.